years after Tata Steel went ahead and acquired the struggling Corus Steel in Europe, the Indian giant has finally given up and decided to sell its UK business. The UK union representatives who are in Mumbai currently are brainstorming with the Tata Steel top brass to try and work out a strategy that's going to cause the minimum collateral damage for workers and the company. CNBC-TV18's Kritika Saxena spoke with the group ED of Tata Steel, the Koushik Chatterjee, just a short while back. Here's an excerpt of that conversation.
Well, it's been a very busy last 24 to 48 hours for Tata Steel. Tata Steel has been in the news for many reasons, and I have with me the man of the moment, Mr. Koushik Chatterjee, to take us through the details. Koushik, the one question that everyone is asking is simply, is Tata Steel exiting UK operations or not?
So I think fundamentally, if you look at the way we have looked at this, is after supporting this business for a very long time, for 8-9 years, supporting in terms of restructuring, in terms of investments, financially, I think we've taken a strategic view that the plan for the future looks very significantly inherent with risks. We spend a lot of time yesterday at the board in stress testing the scenarios and the assumptions going forward, because the market externalities in the UK have changed very significantly. The issue relating the overcapacity which is facing the global steel industry has had a very deep impact on the steel industry in the UK, and it is almost like a perfect storm. So in that context, and the amount of support and the asset impairments that we have taken, it was a strategic view that we should look at all options, which includes a divestment relating to the UK business. Okay.
So is this going to be a complete sale and complete divestment of the UK operation? As a result of it, you will be withdrawing from UK completely?
Yeah, so what we have said is the Tata Steel Europe board, which is the holding company of our European business, has to review all these options, which includes the divestment options of Tata Steel UK in whole or in part. So that answers the question.
You're withdrawing completely out of UK?
Yeah, effectively.
Okay. So let me then ask you, Koushik, in terms of the minute clarity that is required, there is about 17.4 million ton per annum that you have roughly across Europe, out of which roughly 10 million tons is in UK. Can you break up for me what is the kind of valuation that these three plants in UK have at this point in time?
So I think I think there is some numbers that I need to clarify. It's not 17.5. It's more around 13. 13.
So
million tons
across Europe, including Netherlands.
That's correct.
That, no?
So the UK numbers are more around 7. Yeah, more around 6 to 7, because the capacity utilizations are different in different plants at this point of time. The nameplate capacities are a little higher, but the effective capacity is much lower. Second point which is important to say is most of the UK asset is impaired. So therefore it's not a valuation game. It's a question of actually reducing exposure for Tata Steel Group. So I think that context is an important context, because it is a strategic view in view of the fact that we have supported that business as a parent for a very long period of time. We have incurred asset impairments, especially after the impact of the global financial crisis in 2008, and we got to therefore take a view whether you can commit capital for the near term and the longer term. And when you look at all the issues, we have taken a view which is almost kind of conclusive in that sense that we cannot continue to support in the same form, and therefore we should look at all restructuring options, including an exit or a sale.
Okay. Again, to clarify, the Netherlands part of the business, that is the European extended business, will not be sold?
No, so we are talking about Tata Steel UK, which owns the UK footprint.
Okay, fair enough. Now, if you break up your UK operations, there's Port Talbot, and then there are two more very crucial operations. Specifically with respect to Scunthorpe, you've been looking out for a buyer for a while. You are in talks with Grey Bulls, but haven't signed a definitive deal yet. Would it make sense then for one player to pick up the entire stock, or would you look at three specific divestments?
It's not three, it's two. So the Grey Bull transaction is progressing at significant pace.
Okay.
There are the usual challenges of any M&A transaction, which is getting stitched out as we progress. We are in conversation with the Grey Bull partners. We are in conversation with the government because we need the support of the government to do this transaction, to make it more sustainable. So therefore, that is a transaction which has already progressed very significantly. We have had significant support of the employees, unions and other stakeholders, and I hope that that gets concluded. This one is a separate one, which is we've decided only yesterday, so we will have to set up the process and do it in a time-bound manner.
So in that case, it would make better sense in terms of valuation as well to break it up and to sell each plant to different players?
So as I said, this is not a valuation game. It is not a valuation exercise. We have impaired the assets at both Scunthorpe as well as Port Talbot. So it's a question of reducing strategic exposure given the way the fundamentals of the business are in that geography. So given the fact that there is a long products transaction ongoing, you certainly don't want to unwind that given the pain and the effort that everybody has put in to bring it up to this stage. We just hope that we can close the remaining issues and cross the line. And as far as Port Talbot is concerned, or the rest of the UK is concerned, because there are many sites other than Port Talbot also, we will be looking at running a similar process, perhaps a more tighter process, but credible enough to evaluate anybody who's interested in this asset.
So just to clarify, there are two plants that are specifically on the block with respect to Tata Steel UK.
Yeah, if you include long products, so there are two integrated sites, which is the Scunthorpe, which is a separate one, which is already ongoing, and then there is Port Talbot in Wales, which is the one which is the hub. But apart from Port Talbot, there are multiple other sites, and there are other businesses which also forms part of this configuration. It's also important to say that Scunthorpe and Port Talbot are different in terms of products. So one is purely a flat products business, the other one is longs and some of the flats in terms of semis and so on. So these are two different hubs, and so one hub, as far as Scunthorpe is concerned, is already ongoing as far as a divestment process is concerned, and the other one we will start the process as soon as possible.
Okay, since we're talking about Scunthorpe, Koushik, the steel industry has been through a very volatile time. The stake sale has been on for over 16 months now. One player, that is the Clash, who backed out, which is when Grey Bull stepped in. The fact of the matter is that buyers are not willing to buy in a volatile market like this. Does that not worry you that it may put a severe hurdle in the deals or in the various deals that you sign?
See, at different points in time in the cycle, there are different players or investors who have different risk appetite. So even when we ran through the Scunthorpe proposal, more specifically after Clash transaction, the Clash transaction didn't happen out of a full-blown process, because there was a interest shown and we moved on that basis. But after that we really went for a structured process, and we had 3 investors who were interested, and we proceeded with one. So at points in time there are different kinds of investors who have different risk appetites. Some come at different points in the cycle, and we have to, if we have found something in Scunthorpe, we would hope that there would be similar or different kind of people who will find strategic and financial logic to come into Port Talbot too. That's our hope, and that's the basis on which we will proceed with the sales transaction.
What is the timeline that you're looking at roughly?
So as I said that this has been only less than 24 hours, as you said. So we will have to set up that timeline. We will have to put in a process in place. M&A transactions can take very long, can take very short time. It depends on how tight we run, and we propose to run it very tightly. As I said, the board's guidance to the European board is very clear. It has to be in a time-bound manner. So we will have to run that.
So how long would the Scunthorpe deal take in that case?
So the Scunthorpe deal, as I said, has progressed very significantly, has advanced very significantly. But there are challenges and issues which are normal in a running organization, because there are several, for example, contracts which has to get novated. There are various suppliers which have to be taken on board. So those are the things that takes time, and that's been on the process at this point of time.
Okay. In terms of cash burn that you've been seeing as a result of the UK operation, can you give me a sense on a per annum basis, what is the kind of cash burn and what is the EBITDA per ton of the UK business at this point in time? How long will it keep impacting numbers?
So our attempt is that it should not impact beyond a short period of time or a point of time.
So give me a timeline. How
So as I said, that I wouldn't kind of stick my neck out. Maybe after some time, when we have a better sense of how the process is going to get rolled, I think I would be in a better position, because it's just less than 24 hours. We got to set up the advisory team. We've got to set up the process. There's a lot of work to do, and we will do it in right earnest, in cooperation with everybody.
Okay. Lastly, you're in conversation with the UK government as well to ensure that there's a smooth transition for employees. What are the conversations so far? And if the divestments don't go through, what is the option then? Will you look at shutting down the operations altogether, which will thereby lead to losses of several jobs?
So the conversation with the UK government has been an ongoing conversation, because if you are part of an ecosystem, you continuously talk to the government on various issues, you brief them on various issues, and that's what we have been doing. I think we've made the government aware of the difficulties in the steel industry and the difficulties of the UK manufacturing situation. So the government has been wanting to help in various ways, and we've been in ongoing dialogues. So that's a very constructive, open and a transparent communication that has been ongoing for some time. I don't want to venture into what happens if the sale doesn't happen, because that's what the Tata Steel Europe board has to put their minds into. They've just got the mandate last night, so they will have to, as a body, collectively look at all these options. We will have to put a credible process from a sale perspective. If that doesn't happen, what lies ahead is something that I can't comment at this point.
Because the unions are not entirely happy. They're not completely happy about the issue. They are. What is the stance that you're giving to assure them?
So I think it is natural. I would be surprised if anybody was happy. We are not happy either. It is a very agonizing position, because when you support a business, when you look at restructuring, when you look at all management initiatives, every worker in that site, every management employee of that site has given his or her heart and soul into turning it. But today the externalities of the business is so strong and so adverse. And I think it is a global crisis as far as the steel industry is concerned, because one country has built up so much capacity and it is putting it out into the trade market, that it causes existential problems for many countries. And I think I saw an independent report that over the next few years, each country will have to look at its own steel capacity and rationalize its own capacity based on what is more fundamentally needed, and have to look at protecting its own industry against these imports.
Okay, I have to ask you this, Koushik. Have you accepted the reality that you paid £6.2 billion to acquire Corus? Have you accepted the reality that the amount that you will get in return as a result of the stake sales or divestment will be significantly lesser?
No, so I think these are two different issues. Any business which gets into an expansion are based on premises of that particular time. I don't think anybody in the world could predict global financial crisis of 2008.
Fair enough.
Decision makings and scenarios change, and those fundamental assumptions have changed. So I think there are two options. In 2008, to say I leave the key and go out.
Yeah.
And second option is, as strategic shareholders of a steel business, we would try our best to give an effort to turn it around. There were hopes and there were efforts, including resources, people, capital, technology, investments, which have been put in. But today it is, as I said, an existential crisis for the steel industry, given the macro movements. And these movements can have debilitating impact. So it's not a question of a decision at that point of time. It's what's the reality today.
Do you regret acquiring Corus?
No, not at all. I think it's a question of a business strategy which has been followed. The developed markets at that point of time had very stable demand profile. India at that point of time had a much more volatile demand profile, and setting up new capacities in India has always been very difficult. So it was a question of trading and de-risking, and there are many companies in many sectors who have gone and diversified on that basis. So that was the premise.
There's Koushik Chatterjee of Tata Steel saying Corus was not a bad call. We'll keep getting excerpts of that interview through the day right in CNBC-TV18.